Okay, let's talk about RV interest rates. RV interest rates, how do I put this without sounding like a jerk? RV interest rates are going to stay high for at least probably 3 more years. Okay? Few reasons why. We are the first industry to spike in interest rates, and we're the last industry to come down in interest rates. Now, interest rates right now in this moment today are higher at the credit union than they are at the RV dealership banks. I'm going to repeat that again. As of today, December 8th, 2023, your credit union has a higher interest rate per term than the RV dealership banks do. And this is a normal trend. This happens a lot where they trade in and out. This will change again in 4 or 5 months where credit unions will be the same or credit unions will be lower. It's a cycle that happens. They sometimes meet where they're the same, and then there's times where credit unions are way lower and banks are way higher, and then they flip-flop. And right now, the average interest rate at a bank is 8.5%, and the average interest rate at a credit union is 9.5%. So you're talking about banks that go through RV dealerships are on average 1% lower rate-wise than the credit union. Okay, so you're talking about a 1% gap right now. That will probably increase to 1.5%, probably 1.75 before it starts changing the other direction. A lot of that is at the credit unions right now, so you guys kind of have understanding how the money is transacted. The credit unions right now are low on capital, so they're borrowing money at a higher rate than most of the banks did for the capital they're using to give out loans. You had a lot of defaults so far on business loans. You've had a lot of companies that have ran out of cash that credit union bank. That bank at credit unions. You have a lot of credit unions that are bidding for loans that are massive construction loans for different vehicles of sports entertainment, like the Las Vegas A's. That's going to be financed not by investors only, but also there's several credit unions that are making bids to get that loan. They can't simply lend that kind of money based on the capital that's inside their members' banks, or members' accounts. That's going to have to come from a amount of money that's going to be taken from the Fed. Okay, so that's the cycle. When credit unions start running low on cash capital to lend out, they then borrow from the Fed. While regular banks like Bank of the West, U.S. Bank, Huntington National Bank, they have a direct link to the Fed. So that's the difference. So the money that a lot of these lenders have right now in the RV business, on the dealer banking side, right now, they have cheaper money than what the credit unions paid for theirs. And then that cycle will come back and forth because eventually you're gonna have a bunch more members. You're gonna see probably the biggest swing. I love this prediction by one YouTuber I was listening to the other day. There's a prediction that there's going to be a big swing the other way where people are going to get away from banks and start going towards alternative banking like credit unions. So that swing will happen again, but probably around July, August of next year, you'll start seeing it balance out, and then banks will be higher, credit unions will be lower, and they'll just teeter-totter like that. It's teeter-totter like that for like 15 years. Hasn't changed. So, don't look at the teaser rate by your credit union. Look at what the real interest rate is. So, like for example, Fireman's First Credit Union is at like 9.49% over 180 months. If you go down to an 84-month term, they're at 7.99 on an RV. You can get 8.5 or 8.99 on a 15-year term. So let's say you get 8.5 versus 7.99. You get a lower payment, maybe a little bit higher interest rate, but you can pay it off whenever you want. Here's the biggest piece of advice I could ever give to you. Buy when interest rates are high because you'll get a better price. I'm gonna repeat that again. Buy while interest rates are high because you're gonna get a better price. Those of you that don't believe me, hey, spend more when rates go down. But when rates go down, the people that bought in 2023 and the end of 2022 and the beginning of 2024 are gonna sit there going, we're in a great position because we bought when the market was at the bottom at a higher rate. We refinanced it, saved $150 on our loan, plus shrank the term. We saved even more money. So again, folks, don't wait. If you're ready, willing, and able, don't wait. Waiting is only going to cost you money. All right, we'll see you next time.